A huge equity market rally, GST, RERA, the US tax changes, the Bitcoin madness, state elections, politics and whatnot. Yes, it is that time of the year. Another 12 months have simply crossed us by. Can you believe it? Yes, 2017 is drawing to a close. Now, if you systematically simply kept your head down and continued investing in mutual funds, then perhaps you would be a very happy person today. Well, it's a good time, as always, to reflect back at the last year and, more importantly, to look forward at trends that might shape your and my wealth, our personal finances in 2018. So we decided to get out of the studios for a change, and here we are at Kama Lounge in Kamla Mills in Mumbai. And we've got some of our old money friends, as always, joining in exactly a year later. Of course, you've heard them during the course of the year as well. But exactly a year later, we are once again back with Feroze Azeez and Harshvardhan Roongta to discuss all the trends that could shape our lives, our finances in 2018. Gentlemen, great to have you back. It's deja vu. It's 1 year and it's flown by really fast. And I must say, I was going through that old episode, Feroze, and you did say, and I must put this on record, that equity is going to be the asset class of 2017. And that's how it really played out. Your first thoughts?
Yes. See, sometimes you're very fortunate in life to be able to have writing on the wall. Exactly a year back, it was times of demonetization and stuff where there was pessimism built in. There was a lot of good stuff from an economic standpoint which was not priced in. Unlike in debt, sometimes markets go ahead or sometimes they lag behind. And so it was very crystal clear as why I'd recommended 100% allocation to equity and on a radical thought. So that's not the situation today. But I think there are signs which you can read and make sure from a personal finance perspective. The most important thing is asset allocation. And if you're able to get your asset allocation right and review it every year, which is what we're doing now, I think that's a wonderful thing to do.
Absolutely. Harsh, how do you feel looking back at 2017? How's the year been?
Well, we've seen the good numbers. We've seen the inflows into mutual funds, especially the equity schemes.
Oh, yes.
The number of folios increasing to almost about 6.5 crores now. So this is a very positive trend. We look at the performance, the index has given about a 26%. That's a large cap. The mid caps have been about 35% returns, it's been about the last year. Well, what's important is, when we've seen the inflow of money, the kind of money that is coming into mutual funds today, it's kind of scary now. Because, now we're seeing the returns, the markets going up purely driven by liquidity. Now, with what happens with liquidity-driven, rallies is that once the money starts going out, it goes out in the same flow. So now, going further, do we see a repeat of 2017? I doubt so.
The proverbial correction, and we don't know what that word means anymore, do we, Feroze? Does that worry you, the point that Harsh raised? The fact that it's been a uniform one-way move, and almost everybody, especially retail investors who are getting in now, believe that this is an asset class which just goes one way, and that's up.
See, it doesn't worry me.
Okay.
Because if you have solutions to your problems, then it's lesser of a worry. Now, what are the solutions we have to a situation like this is point two. Point one, like Harsh rightly pointed out, it's been a liquidity-driven rally. The fundamentals haven't caught up. But the important part to see is, what is this liquidity? Where is it coming from? Is there a dramatic difference between the liquidity coming in the past to today? Point one is this liquidity is domestic liquidity. Point two, it is sticky liquidity. This is not a person putting 10 crores and that aggregating to 6,000 crores of per month liquidity.
Sure.
It is a person investing 2,000, 3,000, 4,000 rupees a month, which is SIP liquidity of $1 billion a month, is significantly more than FIIs have pumped in the decades to come, right? Or in the past.
Yeah.
I think liquidity might not dry up. I was speaking to a few CEOs of mutual fund firms. They're targeting a 3 billion SIP book in the next 3 years per month. And it's practically possible because 98% of the people are outside.
Sure.
So liquidity can continue to come. And at least in the research which we did, we realized that when domestic liquidity comes, mid-cap stocks run up more than the large caps and FI.
Sure.
So it doesn't
So
bother
have
me.
more mid-cap funds in your portfolio than large caps this year?
So maybe from a strategy standpoint, I think that could be. But I think if we dwell deep into it, I think the holistic strategy being drawn up for 2018 is far more critical.
Oh, absolutely, because we do have the top 5 funds We've really forced Harsh and Feroze to sit down and dig out the best 5 funds that perhaps could be great wealth creators in 2018. That's coming up in just a bit. But another trend that was very, very apparent this year was the shift to financial instruments rather than physical instruments. As Indians, we've always loved real estate, we've loved gold, but the numbers that we've just discussed was a year when people realized that it's probably easier and simpler to make money by investing in mutual funds. Is that trend going to continue, you think, Harsh?
Yeah, absolutely. Because we've seen people have understood the importance of financial assets, the liquidity that a financial asset offers in comparison to a real estate. Real estate has been a bad run in the entire 2017. So there is going to be some kind of inclination towards financial assets. We've seen, of course, it going well with the returns that the financial assets have also given. So now we will see 2018 also giving a lot of importance to financial assets, now within which it is important that you have a proper allocation.
Oh, absolutely.
You cannot just go about looking at the past returns that last 2 or 3 years have been a one-way street. Sure. So you cannot have all your money going into markets going further.
Take your point, and on that note, we will take our first break on the show. The conversation continues. The most important aspect, the right asset allocation, of course, going as per your risk appetite, your life goals. But generally speaking, looking at markets around, what will 2018 have in store for us in personal finance? Back in just a moment.